So let's say you entered a trade and it hit stop loss immediately. Why? Because the big institution already knew where your order was placed. But first of all, let me answer this question. What is liquidity? The market needs to generate liquidity in order to move up or down. If liquidity isn't already there, then it will create one. You understand? Let me read it out completely for you guys here. Retail basics are like support and resistance, double top, double bottom, and trade line. This area mostly generate liquidity for the market. We expect the price to be manipulated at and around this area. You understand what it means? When you come to the forex market, they will teach you double bottom, double top. All those areas are liquidity. Understand? Price often manipulate them in order to move to the direction it needs to. This reminds me few months back when I was stuck. My trades keep hitting stop loss no matter how many times I tried. I will tell you the real fact. Nothing worked consistently. My life as a trader was very tough. Nothing was actually working. I am telling you my real experience. It felt like the market was always one step ahead of me. I spent hours watching strategy videos and even indicators videos as well. And trust me, I did jump from one setup to another, and all it could add is to drain my confidence and my account balance. That is when I stumbled to the concept of liquidity sweep and smart money concepts. For sure, it wasn't just a strategy, it was a whole new way of reading the market. Once I understand how institutions hunt liquidity, that was only when I started spotting entries that made real sense. And since then, my trade became calculated and profitable. But to tell you the real fact from my experience, most traders fail because they chase price, not purpose. Mastering liquidity pattern won't just increase your win rate. It will make you think like the smart money yourself. So make sure you stick around because it's going to get really interesting. And trust me, you will definitely be a millionaire that have been your dreams. Let's go. So there are mainly 4 types of liquidity. If you haven't heard this, I am taking my time to break it down the easiest way ever. One called Tradeline liquidity, range liquidity, equal lows liquidity, and equal high liquidity. You get that? These are the different types of liquidity. We will still go in depth in them. So this one is the Tradeline liquidity. You can write these things down if you want to. Normally, retail traders, whenever they come to the market, they will tell them use the simplest strategy, which is trade line, buy low and sell high. You should buy at the trade line. If price touch the trade line, you should consider selling. And they never knew that that is a liquidity. Sometimes they will be trapped in of whereby price will take their stop loss, grab liquidity, and go to the desired direction. You understand? With this trade line, markets create a lot of liquidity that it will grab before moving to the desired direction. Hope you get that. So this is the chart right now. This is the liquidity. This is exactly how the liquidity looks like. As you can see, this is the deadline liquidity, and price did grab liquidity right here before moving to the upside. Before pushing up to the upside, this is a huge move. And what I'm trying to teach you guys is to be catching all this type of long moves. You understand? Whenever price grab liquidity, it's going to have a strong mighty move. You understand what I mean? So let's go to the next one. And this is the range. I told you guys we have 4 types of liquidity. Range was among them. This one is the range, support and resistance. Majority of the time when price at support, price often grab liquidity as a support and often grab liquidity as well at the resistance. You understand? You have most trading gurus in social media will always tell you buy at the support, buy at the resistance. But normally in reality, price often grab liquidity at the support and at the resistance. It uses the support and resistance to create liquidity that it will grab in order to move to the desired direction. Let me read this out for you guys. Support and resistance, this can be classified as a range. Retail traders are taught to buy at support and sell at resistance. This will generate a large amount of liquidity above and below this area in the market. You understand? This is the example on the chart. You understand? This is the candlestick example. You can see the resistance right here, and you can see the support right here. And when this often happens is at Asian session, and here price grab liquidity breaking above the resistance, and this is purely a false move. People will think that price is definitely trying to move up, but it's grabbing liquidity in order to move to the downside, in order to create a huge move to the downside. You understand? This is exactly what I want to teach you guys today. This is the equal low liquidity. When a new trader comes, the first strategy they will teach them is double bottom, double top. But of course, this is a liquidity price creates and will grab later and will manipulate in order to move to the desired direction. You understand? Let me read this out for you guys. Equal low, double bottom. By the retail side of trading, people thought to buy at the double bottom, which of course generates liquidity below this area. We know that this area are get manipulated, so we expect price come into this level. This is the chart example. You can see the liquidity here, right here. the equal lows, then price grab liquidity to the downside before pushing up, showing a nice push to the upside. This one is equal highs liquidity. Remember, I told you guys there are 4 types of liquidity. So equal highs is also among them. Equal highs double top by retail side of trading. People thought to sell at double top, which of course generates liquidity below this area. We know that this area get manipulated, so we expect price come into this level. Price often gather liquidity at this area that it will grab before moving to the desired direction. Hope you understand that. And this is the full example, the chart. You can see right here, this is the double top. You can see right here, this is the double top, which is equal highs. Then price showed a false break to the upside before it plummeted, before it shifted to the downside. This is exactly how liquidity works, you understand? Just grab this and you can be able to make huge, decent amount of money. I will teach you guys more of it in my next video. And my next video will explain to you guys the necessary things you need to know more about this liquidity. So I will advise you guys to make sure you click the subscribe button so you won't miss the next video. And hopefully I explained it the way you guys could understand it. But if you didn't, make sure you let me know in the comment section and I will throw more light in it, you understand? I appreciate you guys. Thank you guys for watching. I will see you guys in my next video. Peace out.